Hello everyone, welcome to the Ichimoku daily analysis for gold for Tuesday, September the 8th. Well, a very small bodied candle today, the second day in a row with a small bodied candle, and that means that the bulls are making very little net progress today and the previous day. That certainly has ramifications for the strength of this first time frame uptrend that the market is in, and it tells us that the power that the bulls had in taking this market higher, trading out up above this zone of resistance, that market is now, that strength is now waning. The bulls certainly aren't in control of this market, and they're lacking the commitment to trade this market up above $1,000. Now, having said that though, the trend in the first time frame is still up, and that is important to this market. There has not been a change of trend, and the bears so far haven't been strong enough to change the trend. They haven't been strong enough to give us a lower high and a lower low, and that's quite significant. Now, the biggest worry I think for this market is this huge shadow on top of this very small body, and we can see here that the market's tried to trade up above the $1,000, traded right to the 1,007 level of resistance that we identified previously. That was the true area of resistance that the market needed to trade through. And there's been very strong downside price rejection from the bears. The bears have come in on force to force the market down lower. Now, for the day's trading, the market's opened down near the low and closed down near the low, which means that the bulls have lost the commitment that they had. And on the day, only on the day, the bears have taken control of the market. Looking at our Ichimoku indicators, we are trading a long way up above the cloud or the Kumo, and we're also trading a long way up above the Tenkan-sen and the Kijun-sen, and that is quite important for this market. As I've said previously on numerous occasions, markets tend to act like rubber bands. They'll have very strong trending moves, and then they'll basically pull back or relax, and it's like a rubber band. The rubber band will stretch, and then the rubber band will either relax or the rubber band will rebound back. And that is the essence of using Ichimoku charts. The Tenkan-sen and the Kijun-sen are actually measuring the equilibrium or the disequilibrium at the moment. And while the market is a long way away from the Tenkan-sen and the Kijun-sen, which represent two time frames, the market is in very strong disequilibrium, and we're getting signals here, especially with the small bodies here, with the failure to penetrate the $1,000 level and the resistance just above, and the very strong downside price rejection. We're getting indications here that the market will potentially retrace this very strong first time frame uptrend. If we look at the Tenkan-sen and Kijun-sen, both of them are pointing up very strongly, which reflects the very, very strong upside momentum that the market has built up over the last trading week. Now, we know that when these indicators are pointing up very strongly and the market gets a long way away, the price action will come back towards them. And the first of the indicators there, which is the Tenkan-sen, will tend to act as an area of support. So what we should be looking for over the next trading day is for the low of the current candle to be taken out, for the market to have a lower high and a lower low, and to form the first time frame downtrend. We should then look over the next day or two or perhaps three for the Tenkan-sen to hold a support, and look for what the short-term dynamics of the market are telling us. Read the candlesticks and our knowledge of the bulls and the bears, and look for a potential reversal of the first time frame downtrend into a second time frame uptrend for another assault on this resistance level. Now, the market will have to do a lot of work to trade up through this resistance level here. It is quite a strong level, the 1,000 level. And potentially if the market does trade up above there, then we'll be potentially trading up to the 1,029 level. Just going back to a close-up on the price action. The next level of support after the Tenkan-sen, if that fails to hold, is obviously the Kijun-sen, and that will tend to act as an area of support or resistance for the market. But then we have this very large zone of previous price rejection. It's a very big area, and there's potential support anywhere through that area for the market if it does continue to trade down. There's no guarantee that it will, though. If the market trades down through all of that, then there's also the Kumo or the cloud, especially at the top area here, and there's potential for the market to hold support there. So the low of the current candle becomes very important for a potential reversal. The high of the candle becomes very important for a close up above the strong resistance area. And for the market to continue appreciating in the first time frame uptrend, we'd like to see a strong bullish close up above that area.